Thank you so much for coming to the Angel Accelerator. And this week, we're just going to talk about what that means. What is an Angel Accelerator? And in future weeks, we'll dive into topics about how we help angels. And for those of you who came for the topics, you'll get a nice preview of what's coming up. Now, the Angel Accelerator, we're building out the same kind of network. So it currently has 3 members in the network. There's Fledge in North America and US. There's a partner. We do the same exact programming at the moment. We do it on Wednesdays, same as today. We do it 9 hours earlier for the European and African time zones. And the partner doing that program is AVPA, the brand new Africa Venture Philanthropy Alliance. There's a program specifically for Canadians. It's run by an organization out of Vancouver called Spring, and they're going to run like 5 of these this year. There are a whole bunch of other organizations that are all eager to get going and doing the same thing as well. We're going to see a plethora of these programs. The big question when we talk about accelerators for angels, I thought accelerators were for startups, right? You always hear about startup accelerator. So just the word accelerator just implies startups. And it does, and it has. So since 2006, there has been this humongous growth of startup accelerators around the world. If you go and look for startup accelerators around the world, you will find something like 5,000 or 6,000 of them. You'll find them in pretty much every major city around the world. They're all over the place. What do they do? So why are they popular? Why are they showing up in such great numbers? Well, they really do 3 things. The first thing they do is they fill in gaps of knowledge that these entrepreneurs are lacking. The middle one is mentorship. And so Techstars came up with this term of mentor. It doesn't mean the old-fashioned idea of mentoring, as in, having lunch with them once a month or once a quarter and guiding them, usually the CEO through their journey. It can mean that, but in general, it just means coming down and talking to a company for an hour or two, one or 2 or 5 times, and giving them advice. And the last thing is money. So most tech startup accelerators provide money. Most impact accelerators don't. All accelerators try and do something about connecting startups with investors. In general, it took me that long to describe it because it really is that complicated of a service. And that's what they're providing for the startups, and it's working, and therefore more startups are applying, and there's a huge growth in that industry. But I don't need to sell you on that because that's not what you're here for. So what you're here for is to get something equivalent of that on the angel side. And if you look back, I always love to teach by stepping back. So step back, look at the angel community and ask, how does someone learn how to be an angel? And the answer is, for as long as there's been angels, which is a long time, it's been learned as an apprenticeship, with a few exceptions. If you're a female, you can go to the Pipeline Angels curriculum. If you're running a small fund, like a seed fund, you can go to the Kaufman Institute, they'll teach you. But if you go to, this is just a map of the female angel groups in the US. If you go to one of these groups and you join, the expectation is, well, you join, you pay your fee, your annual fee for joining. The way that most of these organizations work and most angel groups work is that they have monthly luncheons. So either 8, 9, 10, 12 times a year, they meet over lunch. A few companies pitch. What the new members do is they watch what the old members do. And so the old members, well, they ask questions of the people who are pitching. And if they like something, they'll jump in and do some due diligence. They might either lead the due diligence session or follow along. And if you're new, you don't know what the terms are, you hear them, maybe you just volunteer. You go, okay, I'll go to that due diligence session and see what it is. And you watch a few of those. And eventually, months later, or maybe even a year later, maybe even 2 years later, you might write your first check. And it's scary. Writing your first $25,000 check, that's a scary thing to do. But at some point you write your first check, but you're not ready to lead a deal. You're not ready to lead due diligence at that point. You just now have written one check. And then you watch some more and you get a little more comfortable. And after a few checks, maybe you lead a deal. That's what I mean by apprenticeship. And that's just how angel investing is, just how it goes. But we think there's a better way. And we've proven there's a better way. And the better way is an accelerator, taking all the best ideas of the startup accelerators and applying them to teaching angels. And so in our program, what you do, you sign up, you get a fixed number of weeks of structured education. So there's lectures and workshops. And then at the end of the program, you actually make an investment. And one of the key things that makes a startup accelerator work so well is that it's done really quickly. So a startup accelerator is no more than 3 months long. And because it's 3 months long and has a deadline, stuff happens. So the same thing's true in the Angel Accelerator. We're going to run this program and it will end on, I think it's May 19th. And it says 10 or 12 weeks because the one in Africa is taking a spring break and we're not here in the States. And so you sign up for this program, you will be done and you will have made an investment by May 19th. And that's totally different than that apprentice model. So here's what the actual calendar looks like. So you are here on January 13th. And this is the first of 7 free workshops. This is the one that doesn't go deep into some topic, except you'll get a general idea of topics in a moment. But we're just going to give these free to the world just so you can get a taste of what this accelerator could feel like if you were in it. And then at the end of February, beginning of March, we will ask for hands. We'll ask who wants to actually join in for the paid program. And the paid program is 12 weeks long. All of these are Wednesdays at this time, same time we just started, which is 6 p.m. Pacific, 9 p.m. Eastern. You do the math if you're in another time zone. And if it's totally inconvenient, just note that there is another cohort also on Wednesdays, same days, and it's at 5 p.m. GMT, 6 p.m. Central European time, 8 p.m. East Africa time. Again, do the math if you're not in one of those time zones. Next week's topic, it's how philanthropy and investing are actually connected. They're part of a continuum, and we'll tell you where impact investing falls in between those. And we'll look at investing from a philanthropic lens, and we'll look at philanthropy from an investing lens. And then week 3, we'll go deeper on the impact part of impact investing. And we'll try and define what impact is. And we'll explain how investment capital can have an impact in the world. Not everybody understands that. And we'll explain how we need investment to solve the actual big problems of the world. And then we haven't picked the topics for February yet. And some of that is we're waiting on guest speakers to find out which day they want to join in. And all this, again, is just warm up for the paid program. That paid program is going to be a wide variety of topics. So we have 12 weeks. We'll spend the last 2 investing, and we have way more topics to cover in those 10 weeks than we could possibly cover in 10 weeks. We'll decide on week 1 exactly which topics everyone wants to hear. We'll know what week 1's topic is. We'll have a straw man of actual week by week schedule. And then we'll talk about it in week 1 to make sure it covers what people want to cover, and we'll adjust. This is one thing I learned from teaching that at that MBA school. Everything was co-created at that school. You'd come to class as a teacher with a syllabus, and you would leave that quarter with something that was slightly different because your students wanted something else. Doesn't sound normal if you haven't been in one of those classes. It's totally normal. Works great. But anyway, here are the various topics that we will be covering more or less. So we will cover Angel Investing 101. Who are angels? How do they fit into the ecosystem? Why do they invest? How do they invest? What stages do they invest in? How do they find deal flow? So all the basics of how angel investing works. We'll go deep into due diligence. In terms of lecture, you're going to see the slides in a moment. It's deep and wonky. And the punchline of that lecture is, here's what you actually do as an angel. Third one that's kind of in that wonky space is investment structures. We'll talk about debt and equity and alternatives to that. We'll talk about which structures are best in which stages and what kind of companies and where. And then we'll put that to use. We'll put all 3 of those to use as we make actual investments. We'll also go and look at actual startup failures. We'll start to bring in some real data and look at real startups and talk about why they failed. And we'll talk in general about why startups fail and why they succeed. But we're going to go pretty deep into startup failures. We'll bring in a couple guest speakers. So there are some experienced investors out there, a couple authors. We'll ask them to come and speak. We also have a huge pile of entrepreneurs, and we want you to talk to entrepreneurs. And then we're going to do some things that are hands-on. We have some case studies, some actual real-world decisions that investors and entrepreneurs had to make. One of these we did last year was a real live thing. It happened the week before we taught it. It's a great little case study, and it really shows you how hard it is to make decisions, both as an entrepreneur and an investor. We'll actually structure some deals because we're going to make some actual investments. That's the last line there. So we'll teach you how to structure deals. And then again, we're going to finish off this program making an actual investment, or ideally 2 or 3. All right, so that's kind of the hypothetical. What do these things look like? I want to show them off to you. And of course, in an hour and a half, I can't actually lecture you all these things, but I can literally show you what they look like. So these are slides from last year's Angel Accelerator, right? And they're not the whole lecture, but here's little snippets of these lectures. So start with the simple stuff. Okay, we call it deal flow when you get companies to look at as an angel investor or a fund manager. How do you screen them? How do you decide which ones are worth more of your time? How do you decide which ones you should just dismiss? So we'll teach you that. The ones that get more scrutiny, as I was talking about due diligence, here's a fire hose of what everything you need to look at in due diligence. And I actually took out some of the slides because it doesn't really fit. It just keeps going. And then the punchline is at the end, which is, am I really expected to do all that? The answer is no, not if you're an angel. And then the slides after that explain what you actually have to do. I left that off just as a teaser. What are yellow flags and red flags? What do they look like? So as you're screening and looking at companies, if you see something, and this title here is defies the laws of physics. I get a few of these per year. Here's a pitch. Looks amazing. You may have seen on TV or on YouTube or whatnot. Makes water out of thin air. Yeah, can. That doesn't actually defy the laws of physics, but it can't actually make any amount of water that's meaningful to anybody on the planet, right? That would defy the laws of physics. So pass on that one. Anyway, those are the easy ones. Those are the red flags. Yellow flags are a little harder to spot. And so we go and teach you how to spot things that require more questions. That's what a yellow flag is. And if you have enough yellow flags, you move on. And if you're running an accelerator and you have some yellow flags, you don't move on. You ask this more interesting question over here at the end, which is that fixable? And I'll dwell on this for a moment because I really like this. This is a learning I've had as I've been running this accelerator for 8 years. Angels and VCs pass on a bunch of things that are great, except they're flawed, right? There's some yellow flag in there and they just can't get past it. And so they just pass because there's plenty of deals out there. There's way more deals than investment capital. So they just pass and pass and pass. But as a accelerator, everybody who applies is flawed, right? If they weren't flawed, they'd be funded and they wouldn't have applied. So everybody who ever applies to an accelerator has a flaw somewhere. And it's my job for my accelerator and the jobs of the directors like me to find the flaw, figure out what it is, because it's there, and then ask that question of, well, we got 2 months. Can we fix that flaw? And then what does the company look like with it fixed? Anyway, moving on. We'll go deep into a few other topics as well. So if we have enough people who are advanced, we will teach how to run a fund. It's a really good skill for angels to understand, because if you do your job, if you become an active angel, you will have 15, 20, 25 investments, which if you're not an active angel sounds like a lot, but you need 15 or 20 investments in angel investing to make money. So one reason to do programs like this is that it gives you a means to go get 2 or 3 or 4 at a time, as opposed to 1 at a time. And so if you did the program like we did last year and you got 7 in one shot, so if we do 3 this year, we do 7 in the next one and 7 in the one after that. Oh, look at that. You got basically your 20 investments done. So if you do that, you got to manage that portfolio. So between those 2 lectures of how to run a fund and how to manage a portfolio, we teach you how to do that. The other reason it's good to understand fund management is that if you are in an angel group that is actively investing in high growth companies, then the money that comes after your money is most likely from a fund. It's most likely from what we just call an institutional investor. And it's really useful to understand their perspective on investing, because it's different than yours. Angels and VCs have different purposes for investing and have different ways of investing. And if you don't understand the money that comes after yours, sometimes you get screwed. And if we have time, and we probably won't have time, but we'll have this recorded and posted on the internet for everybody, is just to go deep on corporate forums. If you can't tell by now, I like the deep, wonky topics. What is a corporation? Like, what is it? Why do we have corporations? And then why are there so many different structures for corporations? What's the difference between an LLC and a C Corp and a B Corp and an S Corp? And when you get down to the nitty gritty part of actually signing the agreement with the company, it's one of those questions you got to ask, and you better understand what the answer means. And I do international investing, and so then it gets even more complicated. I teach startups how to build a business model. I teach them specifically, and I teach people at Fledge, and I teach just workshops out in the rest of the world. How do you build a pitch? And so a pitch, if you haven't seen one, is 10 to 15 slides. Once you've seen 100 of these, which is, maybe 2 years, 3 years of angel investing, you will see 100 slide decks. Once you've seen them, there's a pattern to them. You start to be able to notice, like, what's missing. What are they hiding? What's interesting to me is in the Deconstructing a Pitch lecture is I do this lecture for the entrepreneurs, and I teach them how to highlight your strengths and don't highlight your deficits. And then last year when I taught this to the startups, 6 hours later, I taught it to the angels, and I changed this green slide for each slide. So the way the lecture works is I pitch a company. It's a real company. This is the pitch deck that we put together while they were at the Accelerator. It's a fintech company, happens to be in Uganda. And then after pitching it, I go back through the slides one at a time. And for each slide, I tell you what's expected on the slide, what the entrepreneur says when they're showing that slide and why. And then the third one is what you should be looking for when they're talking about this. What are they leaving out? What questions should we be asking on that slide? What might be hiding? And I do that for every slide in the deck. Similarly, I teach people how to build financial models, because every business plan needs a financial model. Never invest in a company that doesn't show you a financial model. Don't invest unless you know where your money's going and where the company's going. A lot of first-time entrepreneurs have no idea how to put together a financial model. They may know how to build a product. They may know how to sell a product. They may have $100,000 in revenues, but can't tell you what next month will be on their financials because they don't know how to build a financial model. So there's a long lecture. It goes in great detail. This is just a smattering of the slides. And then I teach the same thing to the angels so that they understand how a financial model works, so that they can interpret them and ask the right questions. And then these ugly slides here that look like reports, well, those are actual financial reports from actual companies delivered to me as an investor. And then I go deep on what's wrong with these reports, what's missing, what's hiding, why I can't tell how the company's actually doing from these reports. These are honest to goodness, compliant accounting reports, financial reports. Okay, and lastly, we have some bigger, broader themes that we talk about. Top of the list here is how to see the future. So if an entrepreneur comes and pitches you, and they're telling you that there's a problem right now, and they have a solution, and it will be ready for the market, by the end of the year, and it'll be in the market, and it'll get to scale in 2023. Well, the first question you should have is, well, what's the market going to look like in 2023? The job of an entrepreneur is to see where that puck is going and be there with the product in hand and a bunch of customers that already said yes when the market's ready for it. Right? So as the market's growing up, you got to hit it at just the right time. That's actually a preview. That's the number one criteria for what makes for a successful company, successful startup, is timing. It's being in the market at the right time. You need to be able to see the future too, right? They can lay it out for you and you just have to say yes or no, but you got to be with them in terms of being able to see out a year or 2 or 5. This is some of the slides we'll use for next week, which is what is impact investing. So we won't go too deep in that. It's a lovely little story, and we'll talk about what philanthropy is, and we'll use some real world cases there too. And then depending on where we go, we'll use the Africa one in the Africa cohort, but I do a lot of investing in Africa. I do so much that I started a podcast called The Opportunity is Africa, and it's live on one of my investees, which is the Business Radio Network. The gist of this real quick is Africa is going to be huge. So if you think China, China was a big story in the late 80s, 90s, early noughts. Still is a story, but as Americans, there really wasn't any way we could invest in that. India has been a huge growth story, right? In the 90s and the noughts, still today. Really isn't any way we can invest in that either. Well, here's the next one and the last one on the planet. It's the last place on earth with 1 billion poor people, and they're not going to be poor for another 20 years, right? There will be hundreds of millions of middle-class Africans by the middle of this decade or the end of this decade. And there are ways to invest over there. So this is what we're going to do for the next 6 weeks. We're going to tell you some of those topics. Please bring your friends. If you like this, I'm sure you know other people who would like this too. Bring them too. Enjoy this. Enjoy all the content that's sitting on the website. And then we're not going to ask you to do anything else besides come and enjoy until March 1st. And in March 1st, we're going to ask you if you want to sign up. And if you do, we're going to ask you to commit some capital. I'll tell you what that is in a second. And then we're going to go for those 12 weeks. And we're going to go deep. As you can just see by this content, we're going to go as deep as we can. And at the end, we're going to have an investment. Just to be clear, you guys choose where to invest. So I'm running this program. It's not my choice where to put the money. This is not a fund that I'm managing. This is a fund where I just move the money around and you guys together, you decide what to invest in. Okay, so what kind of companies are we talking about? I only do impact investing. So none of the companies I bring you will pitch you an app that anything. They may have an app, but they're not going to start with an app that, because that's not what we do. We work with companies that solve real problems. I call these mission-driven for-profit companies. And specifically mission-driven companies where the mission is built into the product or service. So we don't even care if the customer cares about our mission. All we have to do is sell the product or the service and we win, right? Think Whole Foods, right? If you shop at Whole Foods, then you are fulfilling Whole Foods' mission, whether you like it or not. Okay, and so that's a taste of what this is like. To get more information, there's a website, of course. It's called theangelaccelerator.com. Under the Lessons tab, you will find edited versions of some of these talks. So you don't have to wait till next Wednesday if you want some more education. Anytime you want, we're putting these up on the internet. We think the value of the program is actually being in the cohort, talking to the fellow investors and making the investments. That's really what the value is. The lessons are nice. We're still going to do those. And then on rsvp.theangelaccelerator.com and on the when and where, there's an RSVP link that'll bring you to the same page. So this is our Eventbrite page that just shows all of our events. You will find next week's already listed. And before we get to next week, you'll find the week after that. And that's the idea. We'll just put a week or two up front so that you can't skip too far ahead. We do that on purpose because we want to meet you. We want to hear from you. We want your feedback on this. And with that, I will open it up to questions.